Hello and good day to all of you. My name is Brad Wydra, and I'm going to do my best to announce who has joined. It is Jan Nieuwenhuijs.
Yeah,
Yeah. So we're
correct.
joined today by Jan Nieuwenhuijs, who is a gold analyst, who I believe works is your company based out of Finland. Uh,
I actually just left that company, and I'm going to start my own website soon.
oh wow.
Nobody knows this, but you're the first. I just left the company. Yeah, sometimes these things happen, but I'll be publishing on my Twitter feed and all other feeds I have, LinkedIn, whatever. I will publish the name of the new website where I will publish my new research.
Oh, congratulations! Yeah, that's an exciting new endeavor. Will this be the first time that you've gone out to like have your own venture, or have you been?
Well, actually, I started all this in I think 2013. And I started with a blog, and then I was offered a job at a billion dealer. It was Billion Star at the time, and so that was my first professional. That was in 2014. Job as a gold analyst, and then I worked for Voima Gold, and now I'm doing it professionally on my own. Yeah,
Yeah.
so it's exciting.
Yeah, wonderful. For me, a little bit of a background. I couldn't get a job at a news agency anywhere, so I kind of just like started my own channel here on Twitch where we would read through like a lot of international stories, cover a lot of geopolitics, try to do like some macroeconomic research, and the channel kind of just like grew and grew. I've been doing it now for this is around like 20 months, I think. I usually broadcast like 6 or 7 days a week, and do a lot of focus on conflicts in the Middle East and by my like trying to learn, I've kind of begun to realize that I think macroeconomics and monetary systems and so forth are much more important than I maybe gave them value to earlier in my lifetime. And it kind of led me down the rabbit hole of discovering, some of your work on Twitter, looking through some different YouTube channels and so forth. So I really appreciate you giving some time over here so we can ask you some questions.
Oh, that's an interesting story, and I hope I can answer some of your questions. Yeah.
Yeah. What were some of the like early things that made you get into, I guess, like wanting to work with gold, or thinking that gold was going to become an important part of, I guess, like international payment systems, or as a storehold of value, or what? If you'd like to talk a little bit about like that to begin with.
How it started for me, gold.
Mm-hmm.
Yeah, well, in after the crisis in 2008, I was a sound engineer at the time, and at first, I had this. At one hand, I was very interested in economics in, let's say, high school and even earlier. At the other hand, I found it a bit abstract, and I was always hearing on the news like the economy is going well or it's not going well, and I was looking out the window and I was like, I don't see it. I just don't see it. But after the great financial crisis, I worked in the movie industry, and in 2009, the movie industry in the Netherlands, which is completely collapsed. And I just picked up a book, and I kind of was obsessed immediately because somebody explained it in very superficial language. Wasn't very scientific. It was popular scientific. And then I became obsessed with the economics, and quite soon I understood that economics is about scarcity, and gold is scarce, and if you can print unlimited amounts of money, then that's there's immediately moral hazard, and it can lead to all sorts of misallocation of capital and things like that. So I was immediately drawn to gold in the sense that I knew gold should have a role in the system, because if you have nothing, if you have zero anchor in the system, things will get out of hand quite soon. Of course, it just happened. So it was, but I was realizing this, and so that's how it started for me.
Yeah, I guess well during the financial crisis I'm 31 now, so I was what, maybe like 2019. I was in college. It wasn't really something that I was like paying attention to at the time. I kind of I started to realize that something was going wrong. But then by a turn of events I took a job working for somebody, and they introduced me to the book Capital in the 21st Century by Piketty, the French economist, And then I started going through, and I began to get interested in inequality, in wealth inequality. Is this something that always is? Is this produced by like the decisions that we make? And then this kind of began me down a road of beginning to. I guess I started to look at the works of like Michael Hudson. I maybe shifted into Mark Blythe. I think has done some really good analysis as well. Steve Keen has been someone who's been really influential to me and was actually one of the only other very big name guests that we had on the channel. And then last year, I had seen the video about global Trumpism from Mark Blythe, where he was talking about how the consumer debt is unsustainable, how I think in the United States it's around 70% of our GDP comes from individual consumption, and we're about a 47% services sector economy. And it just seemed to me that the underpinnings of the systems were no longer sustainable, that you couldn't just continue to roll the debts over and over again. And now I'm kind of in my phase of beginning to think about, is it going to be a transition to gold? Will maybe the SDR from the IMF, rise to prominence? Is there going to be another currency? Will there be a cryptocurrency? So with that, like a little announcement part, where do you think you see gold kind of fitting into? Do you think it's going to be utilized as more of like a payment clearing system? Do you think that the central banks are going to be holding it as like an inflation hedge, or and this is a very difficult and broad question because it's like, well, what's the answer going to be? So go as you will.
Well, I think it's hard to say, but I think the thing is that gold is very, of course, it's physical, so it's difficult to transport. And we could go back to a gold standard, but what I see is less globalization. Now with the pandemic, with the corona crisis, you have less globalization, but also before the pandemic with Trump's foreign policies, you can see, in the decades before that, you saw more and more connection between countries and on all sorts of levels. And now that is drifting apart, right? So it's very difficult to say, because you need a lot of cooperation to have the classical gold standard. You perhaps know that from about 1875 until 1914 we had the classical gold standard. But the gold was centered, it was like the US dollar is the world reserve currency now. The British pound was the world reserve currency then, and it was backed by gold. And London was really the clearinghouse in terms of gold, and which facilitated trade. But you need places like that, storing hubs, clearing hubs, for the gold to clear, because you can't, with everything you buy in, for example, China, you can't send a brick of gold to China and back and forth, things like that. So this is something that is what I'm thinking about. So I don't really think that we're going to go to a classic gold standard, but gold might become the predominant world reserve currency. Also, just because there is less globalization and countries trust their currencies less of each other, because every currency is, as you know, a liability of other countries, like the dollar is a liability of the US, and so forth. So if you look at the global international monetary system, of course, you have international reserves, right? Every country has, next to its own printing press, you have international reserves. And of course, these international reserves matter because, as I just said, they are subdued to scarcity. So it can be, for example, now the majority of international reserves are made up of US dollars. Gold is about 12%, I think, last time I looked. And it can be that, for example, the majority of international reserves become gold, and everything around that, because also you get there's very little yield to get on government bonds. So you can get a rush out of bonds. Now, in the past decades, what we saw was that interest rates have been declining, right? Nominal interest rates. So it became, that's actually from an investor point of view, that's a bull market in bonds. But now these rates have hit zero again, and you also have inflation, so the real rates are even lower. So it's and as you know, central banks have artificially manipulated interest rates down and down and down, and squeezed all the the investors into risky assets. So it's very difficult. And there's actually, I know this is a long answer, but you asked a difficult question. And there has been a study done by an economist who's called Smeltzing, I believe, and he studied global real interest rates over the past 800 years. And his conclusion was that with or without central banks, with or without a gold standard, these global real interest rates are declining, and the average, the trend line is now hitting zero. So it's very likely that that there just won't be any. This is some kind of maybe something we don't totally understand, or it's just the global economy becoming more and more efficient. I don't know yet. But you can imagine that, there's hardly any yields or interest rates, any return on US government bonds, same as in Europe, same as in Japan. China, I'm not so sure, I haven't looked lately.
I think China actually has the highest yield of pretty much all of the bonds at the moment, but there's
of course.
there's the issue of, do people actually want to hold them, because a very shadow banking system. But I do think that as you were though, sorry.
Yeah. I think China, of course, has the highest interest rate, but China's capital account is not open, so and they don't have a rule of law like we have in the West. We still have in the West. But you can wonder if these things unravel that are happening now, which is a world submerged in debt, which cannot be refinanced and is unsustainable, and it will be or there will be defaults, or on a government level there will be a lot of inflation needed to erode the debt burden. And real rates stay so low as they are now, or become even lower, then maybe gold will be the world reserve currency. There's a possibility that central banks will, instead of targeting inflation and unemployment, they will just target a gold price. That is called that's a model called gold price targeting. And it could be it's quite easy, because you have a sort of a stable currency, because you target the gold price with your currency. But it's very easy to devalue, and of course you don't need to pay. I don't know about international settlement actually, but that is one of the options I see ahead. Yeah.
This actually makes a little bit of a good transition, because I wanted to talk about the article that you wrote for Voima. I think I read through it once with my community, and maybe once by myself. And the part that was really fascinating to me was how it seemed to be the European Commission was trying to develop an alternate monetary system to the United States being the international currency in the 1970s. And then it seemed, you brought up the quotes from Kissinger and so forth, where it seemed like the United States was, very vehemently against this happening. So would you be able to sum up in short a little bit of what your research on that came into? And then the second question that I would be asking afterwards is, do you think that the United States will once again try to do everything that they can in order to, maintain the position of the Federal Reserve note that we have at the moment?
Sure. Your first question about this, about what happened in Europe when Nixon closed the gold window in 1971. Of course, after World War II, Bretton Woods was introduced. It was the global monetary system at the time. The deal was that the dollar was as good as gold. It was pegged to gold at $35 an ounce. It was used as the world reserve currency. But the world reserve currency also consists of, you have different let's say things that are important of a world reserve currency. Also, you have the transaction part of a world reserve currency. But it was used as the world reserve currency, and was also used for all transactions and so forth. And it was pegged to gold, so everybody had a lot of trust in it. Then the US started printing more dollars than it had gold backing those dollars up. And in 1971, they broke their promise, and they disconnected gold from the dollar. And what happened then, of course, was that the United States could devalued. First of all, of course, they devalued the dollar against gold. So the foreign countries that were holding dollars were, losing their money because first they had something that was as good as gold, and then they had something that was actually it was nothing, and it was losing its value against gold. So. As you can imagine, these people in Europe, predominantly, the world was pretty much dominated by Europe and the US, by the way, at the time. You also had, of course, Russia, but it wasn't really as powerful, or it was a different part of the world.
More power militarily than economically at the time, I would say, for Russia, kind of. During that time.
Yeah. Anyway, so I would like to say that there was a sentiment in Europe to counter the dollar hegemony, and also to, at some point, bring gold back into the system, and also to because the US really wanted to phase out. This is literally the words you read in those memos. They wanted to phase out gold from the system, because if gold was completely erased from the system, they had more flexibility with the dollar, and could exert more power with the dollar. So of course Europe didn't want this, and there was a political diplomatic battle at the time. France was very vocal about they wanted to get back to the gold standard. Other countries were a little bit less vocal, but of course we know what happened in Germany in terms of hyperinflation after World War I. So they kind of, they have a sense of hard money policy. So what happened and then I will discuss it per decade. So first of all, what happened this was in 1968, is that then the gold price in the free market was allowed to float. So then you had the official gold price was kept at $35, and the free market gold price was allowed to float. So the official gold price, I know this is a bit complicated, the official gold price was $35, and central banks agreed not to buy from each other and then sell in the free market at a profit. And that was called the two-tier system. Of course, the official gold market was totally paralyzed, because no central bank would sell its gold for $35 if it was aware that it was actually worth more in the free market. So the first thing the Europeans tried to do is get rid of the two-tier system, and there was a few conferences held about that, and eventually in 1978 the two-tier system was it all had to do with a lot of rules, by the way, like real rules that were set up in the IMF rules. The IMF was set up after the Second World War to, let's say, help smooth function Bretton Woods. So there were all these rules they had to get rid of to free the gold price. In any case, in 1978, they got rid of the two-tier gold system, and the Europeans set up a system that was called the European Monetary System, the EMS. And the EMS had the precursor of the euro, which was called the ECU. And the ECU was partly backed by gold, and they did that to bring back liquidity into the gold market, to keep it sort of alive, the gold market. So through the decades, the Europeans kind of did things to keep the gold market alive. So if we move on to, for example, the 1990s, we can see that European central banks started selling gold. Now, at first you might think, well, selling gold doesn't help gold at all. It would, if central banks start selling a lot of gold, for example, central bank of my country sold 2/3 of its gold. That's not a signal of, hey, this is going to be the next big thing. But they had an official agreement about it, and they did it in cooperation with each other. And they said gold is going to play an important role in the international monetary system, in the background as a reserve asset. but we just have a little bit too much gold, and we want to do this as a concerted in concert to sell gold. And they made it was called the Central Bankers Gold Agreement, CBGA. And
Yeah, I
they
did want to ask you about this one. How many countries actually agreed to the way that you wrote it in your article? Was it seemed that they all agreed to hold more or less the same amount of gold at their central banks? Am I reading the way that you wrote it accurately?
yes, sort of. So they sold. Initially, there were 11 central banks
Okay.
that started selling, and actually, my central bank started in '94, I believe, with selling, and then they saw it had a very negative impact on the market, and then this agreement actually was established in 1998.
Okay.
So to stabilize the market, and it worked because in 1999 the gold price started rising again. Now there were also other factors that were influencing this: the gold leasing market, and of course all other prices in the world, you can say. But years later, in 2010, or actually in 2011, and I found out about this in 2015 or something. But in 2011, the great financial crisis had happened. Sorry. And there were questions in Parliament. Of course, everybody was really awake about, whoa, things can really go wrong, right? With money and like globally and big time. So some members of Parliament in the Netherlands asked the Minister of Finance here, why did we sell 2/3 of our gold in the past 2 decades? And what was the most important reason for selling the gold? And the Minister of Finance said, we sold all that gold because we thought we had too much relative to other important gold holding nations.
Okay.
So what he said is that he wanted to equalize the gold reserves, right? And if you look at how gold reserves were distributed, let's say in 1971, and how they are distributed now, official gold reserves, I mean, I'm talking about the gold reserves of the central banks around the world, it's much more even, right? So, and this was in part because the rest of the world grew and bought more gold. The central banks in Asia, for example. For example, the U.S. economy didn't shrink, but it declined in market share of total GDP of the world. I'm comparing these gold holdings with GDP because that's the only real thing you can measure it to. I mean, if you measure, for example, gold holdings to money supply of a country, of course, any country can increase its money supply. So you have to compare it to GDP. So if you compare monetary gold reserves now across the world relative to GDP, it's pretty evenly spread. And if you look at the countries that I just mentioned, or the agreement I just mentioned, sorry, my English is terrible today. But I just said the CBGA, right? These European countries that agreed how to sell gold and how much every year, etc. That is more or less the Eurozone, plus Switzerland and the UK. Their gold reserves are pretty evenly spread relative to GDP. And I mean, you know, nothing is perfect, but it's really remarkable if you see it. And then if you zoom out and you look at the gold reserves of the US and the Eurozone and Russia and China and make a guesstimate about what they really have instead of what they say they have, gold reserves are pretty evenly spread. So, you know, I don't believe in giant conspiracies in that, you know, a few people in one room thought about this, but I believe these things have organically developed over the decades. You know, maybe some European central bankers said to each other, well, you know, we can think of the euro also, you know, to counter the dollar. We can think of this, about that, you know, you have a lot of course, factors that play into this. But we can also sell a little bit of gold. It would make the gold more evenly spread across the world. And at one point, it's very likely that we have to go back to gold because what we're doing now and just purely resting on fiat money it will come to an end someday, because it always has. So that is a bit my take on, you know, how these things happened. It's not like a conspiracy, or I don't think it was written down, actually. Yeah, it's more or less my analysis, my theory of reading a lot of history books, diplomatic cables that have been published, just bits and pieces, breadcrumbs, and put it together and came up with this conclusion. Also, it's interesting to mention that there's an ex-central banker here in Europe. He worked at one of the central banks, and I know this person, and I asked him, when I did the research before I published this article, I asked him, well, did you know about, you know, I found this this thing the Dutch Minister of Finance said in Parliament about equalizing gold reserves, it seems. And you worked at the central bank, you know, before the great financial crisis. Were you aware of this? And can you talk about this maybe? And he said, yeah, I was aware of it, but I can't talk about it because it's confidential. And
Interesting.
maybe you should, yeah, yeah. So, and I have noticed this quite often, actually, when I research gold and ask questions to central banks, and also submit Freedom of Information Acts requests. You can ask them anything, but when you talk about gold, suddenly there are all sorts of secrecy acts and laws. So, and it's just, you know, if you talk about the global monetary system, of course, this is a very delicate subject, right? Because it's huge, and because gold is, yeah, let's say, the dollar's kryptonite, for lack of better words. It's very sensitive what you say about gold. So, and what's also interesting is that, so they, before the great financial crisis, these European central banks never really spoke positive about gold. You know, they said, yeah, it's, you know, this, I just said this one declaration in 1999, they said it will remain an important reserve asset for us, but they never, you know, encouraged people to buy gold or whatever. That has changed after the great financial crisis. So, for example, the Dutch central bank, but also the Italian central bank, German central bank, on their websites, what you read, what they say about gold is insane compared to 10 years ago. They encourage people to buy gold. They say gold is the perfect piggy bank. Shares and bonds and everything can go up and down in value, but gold will always retain its purchasing power. That's on the Dutch central bank, its website. The Italian central bank says gold is an excellent inflation hedge, etc. So, and then, of course, and then I'm almost at the end of my answer. We have the trend that European central banks have repatriated gold from the UK, but also the US, and they have also upgraded their gold reserves. That means that all the gold they have, they made sure that it's all lives up to current wholesale industry standards. For example, if you have a very old bar that's 80% pure, which was very normal 100 years ago, because coins were made from that purity, you can't sell it. You can't. It's not liquid in these times. So the German central bank, the Swedish central bank, the central bank in France, they all upgraded all their gold to current wholesale industry standards. So if you follow all these trends, like repatriating gold, upgrading the gold, the change in communication, the equalization process that happened in the 90s, the developments that happened in the 1970s, the European monetary system they set up in 78, you know, with keeping the gold market liquid. And now this communication, what I just described, this is really a red line I'm following, and tells me that gold will be incorporated into next monetary system.
Yeah, that was a lot to take in. I may actually have something to add in, or at least like see where we can take it from here. I guess I'll go with like what my thesis of the moment would be. When the when the monetary system of the United States changed from being commodity backed in 71 to being just completely free floating. I think that we would agree this is, when it became the fiat currency. It seemed to me that in order to maintain the United States position as the global reserve currency, we had to continuously run higher and higher deficits with foreign nations. That way they would have enough dollars in order to go into, minerals markets or oil markets, we worked with Saudi Arabia to peg oil that would only sell it in the dollar. And now as we are coming up to kind of like I would say maybe like the end of how much more debt the American consumer can take on, it seems to me that the 2008 financial crisis, the blowing up of the repo markets in 2019 in the United States, and even a little bit of the March liquidity crisis, it all seems to me to be that there are many more debts that are denominated in dollars, and there is in no way enough actual dollars out there in order to satisfy the debts at the moment. And this to me was why a lot of people had to dump multiple different asset classes in March. And I'm actually thinking, and some of this work, I was talking to you a little bit about it. It is from George Gammon a little bit. It is from, I just watched a video with Steve Van Meter and Jeff Snyder talking about, the Eurodollar system and how it got a little bit out of control outside of the central bank of the United States and outside of the government purview of the United States. But to me, at the moment, the big problem in the international clearinghouse system seems to be there is in no way enough dollars for the transactions to keep continuing to happen in dollars. And this is why I think the Central Bank of the United States used to only have swap lines with 5 other central banks, but I think they've opened it up to, I think it's 14, and it might even be more than 14 at the moment right now. And I'm really just wondering how this is going to continue to go, because some people are thinking that this will force foreign nations into forex markets, which would lead to a massive parabolic growth in the Dixie or the dollar index. What do you think at all about there just not being enough dollars to satisfy like all of these payments that are required to be in dollars?
Very difficult question. I know this is kind of like the milkshake theory you're talking about, right? I don't know if you have heard this
Yeah,
phrase.
I've heard them talking about it a little bit.
Yeah. So I don't know. These are the big forces now in the world, according to my analysis. Just like if you take one country, the US, it's very easy. You have massive deflationary forces and massive inflationary forces. So it's really, you have these both camps that are saying, no, it's going to be deflation or it's going to be inflation.
Can you? So I'm actually with you that I think there is some deflation and some inflation at the same time. Can you explain a little bit why you think that certain markets may have deflation while other areas may have inflation, by chance?
Well, deflation normally, or most people talk about deflation, and they talk it's in terms of consumer prices, right? I mean, you can you also have asset price inflation, but normally when I talk about deflation and inflation, I'm talking about consumer prices.
Okay.
And of course, if you have a recession, that's deflationary, because people lose their jobs, they don't have an income, they spend less. The snowball gets rolling until the system gets sort of liquidated, as it, in the free market, everything then would be settled, and you could grow actually and have a very healthy grow after that. But that is not the case anymore, because every time since 1971 there was a crisis, they lowered the interest rate even further, and they printed even more money. So the system never gets liquidated. But that means that the bubbles get bigger and bigger. And now, of course, during this crisis, it's also again massively deflationary. I mean, if you look at how many people lost their jobs in the US, that is just staggering, and it's because the government stimulus that the economy keeps going to a certain extent, but these are the deflationary forces. And then, of course, you have these, you have the printing press, and then, but you have to go into all the monetary aggregates of what is spendable money and what not. And actually, I can be very short about it, is that the printing of money of the Federal Reserve is indeed not really inflationary, because you expand the monetary base, but the commercial banks aren't lending any. So, most of the money is credit created by commercial banks. So, actually, there's not a lot of growth in, or enough growth in the broad money supply. Well, actually, now there is this time around, because the U.S. government is spending so much money through fiscal policy, that people are actually getting a lot of real money, but they aren't spending it because they are afraid. So they save it, and the money is not spent. Velocity then drops. So that's on the deflationary and inflationary forces. Did that answer your question?
It did a little bit, and it does bring me to another question we kind of like spoke about a little bit in our email. And my whole life my whole like life of caring about economics, I thought that quantitative easing was money printing, and I think I may actually now have like a little bit of a different stance than you on like the value of the quantitative easing. So, from specifically, Jeff Snyder is really the one that's been putting this forward, and I'll see if I'm intelligent enough to explain it the way that he does. Jeff's claim is that when the Federal Reserve is buying, the quote unquote buying the assets off of the banks, instead of giving them liquidity into something that they can loan out, the only thing that they're doing is giving them liquidity into their reserve account at the central bank. And it seemed like, I'm asking if somebody can find the paper for me. There was an IMF paper that came out in 2019 that said commercial banks cannot use their reserves for anything other than, overnight transactions or kind of like a clearinghouse currency. So it kind of sounds to me that what they're doing, and I've used the terminology, green dollars would be like an actual dollar in my pocket. A yellow dollar would be a treasury bill. And a blue dollar would be a reserve account, like a dollar in the reserve account. It seems that they are taking yellow dollars out of the system that could have been liquidated and sold for green dollars, and converting it into just a balance at the reserve that is only meant for banks to close out their payments with one another at nighttime. And the hope by the Fed would be that because they have a higher reserve account, they're going to loan or lend out more. But with, kind of current conditions of the market at the moment right now, they don't seem to have any desire to do any type of lending. So rather than the quantitative easing actually injecting liquidity into the system, it actually seems to be pulling out the opportunity for the banks to liquidate their assets. Do you have any thoughts on this?
Yeah, I think you got it correct, and I agree with you that it's a very good comparison or a system that you have developed with your green dollars. That is cash.
It's from Stephanie Kelton. Stephanie Kelton in The Deficit Myth.
Right.
Yeah, she claims yellow dollars are treasury bills and green dollars are the actual currency. So shout out to Stephanie.
Yeah. And blue dollars are then the reserves, right?
Yes. That I added in.
Yeah. Yeah. So yeah, I agree with you. And you can if the Fed purchases treasuries from commercial banks, what it does is, of course, the treasury is transferred from the commercial bank to the Fed's balance sheet, and the Fed creates more assets on more liabilities on its balance sheet reserves, and those are assets for the commercial banks. So the commercial banks receive more bank reserves. Right. So bank reserves aren't spendable. They can be used to build more loans on top of it, and because they have more reserves now, the banks. But the reserves themselves can't be spent. The thing is that I always miss in this debate is that reserves can be exchanged for green dollars at the Fed, right? I mean, the Fed was born out of a clearinghouse in which the let's say the green dollars were the reserves. Now, of course, that more and more became blue dollars. But don't forget that if there, for example, is a bank run, what will these reserves are the amount of dollars the banks have they can exchange for green dollars at the Fed to give people green dollars, right? If they want to withdraw their money.
Big question here. Have they done that at all? Because I don't, this is something a little bit newer to me. I haven't exactly stumbled across this one at all. So like, so technically the Fed isn't even supposed to be able to create any money. And so I don't exactly know what they're doing. But so you're saying that if I am a bank and you take too much from me and, you know, the neighbors take too much from me, I can take my reserves that are the blue dollars and actually swap them with the Fed to get greens?
Yeah.
Okay.
Yeah.
Yeah. I'll have to do more research into this. Okay.
Yeah. I mean, I'm just as surprised as you are, because I'm watching all these debates, and you know, I've asked, for example, maybe you know Professor Werner.
Oh yeah, right. Yeah, I was actually going to bring up. I was going to bring up a little bit of the credit. Yeah. So.
Yeah. Well, you know, these people, fortunately, they follow me on Twitter, so I can ask them a little something on direct message. And I also asked them, like, you know, in this whole, sometimes you have these debates and memes in on YouTube or on Twitter, and this is a current one. So I asked, and I was like, yeah, of course you can't spend reserves, but you can. I mean, cash and reserves are the same thing, you know. I mean, if you think about what is a bank run, that is how much cash a bank has, and the people withdrawing money, and if you know if they're at the bottom of their cash reserves, they're bust, right? So. But the cash and the reserves are the same thing. It's only that it's, of course, a lot more convenient to have reserves. They need reserves, blue dollars, for the clearing between commercial banks, which happens through the Fed. But yeah, they can exchange them. If there is a bank run, these reserves will be, in part, be exchanged for green dollars.
Yeah, I'll have to look into them because some of the people that I was reading about or listening to say that that cannot happen. No, I'm not saying that it can or it can't. I'm just on my journey. I think, you know, like a lot of us are, we're all kind of trying to figure this out together. And I have to think that there's not even a lot of people really in like mainstream economic circles that would be having, you know, a conversation such as this. I feel that this is very removed from what I find in like American, you know, mainstream thought. Do you often find that you're kind of like an outlier, or have you kind of like you found like a little circle of people that you would agree with?
I'm always an outlier. I'm always like, you know, I started as a nobody, just like maybe you started, you know, you weren't interested in economics first. I had the same thing. And then I started digging, and just like you called it a rabbit hole, I had the same thing. I meet people that, of course, experience the same thing. And I don't know, I call myself an outlier because I hardly ever agree with somebody fully. Like whoever it is, you know, I can agree with somebody for 95% or 80% or 50%, but not all the way. So I'm just very stubborn and draw my own conclusions. What I just told you is my analysis. I hope it's true, but if it's not true, you know, it's not. This is not about me being right. I just want to find out the truth. So if you can show me evidence that what I just said is not true, I would be happy to hear it, because I would learn and progress. But I think, because you know, I'm also sitting here with my balance sheet and making all the doing all the clearing and reading all the old books about banks and the new books, and just using common sense. And for example, if I see a YouTube video and I think that doesn't make sense, you know, I go figure it out, and this is what I came up with. So and of course now these people say, you said it yourself as well, the Federal Reserve cannot print money, right? That is now some kind of
well, it's not in their charter. Like legally, I think if you look through what they are and are not allowed to do, they are not allowed to do that. They're only allowed to make a loan that needs to be paid back at some point. I think this is where they're coming from.
But then, if you hold a dollar bill in your hand,
oh no, specific. Yeah. I have more learning to do.
Like, of course, the Fed prints money, right? I mean, the Fed has a balance sheet. They can buy a chair, print paper currency and give it to the chair owner, the former chair owner, do the swap, put the chair on their balance sheet as an asset, and the currency in circulation is for them a liability. Mm-hmm. You can look at the Fed's balance sheet. I mean, it says on top of the liabilities, it says notes and coins.
And, this is wonderful.
Then there, there are all these other. You have bank reserves, and you have the Treasury General account, which there's a lot of ado about these days. It's kind of funny that we talk about it because I was just breaking my head for a few weeks about this. But what they hardly ever mention is that the Treasury also has accounts at the commercial banks. So the Treasury General account is not the only money account they have. They have also TTL accounts at commercial banks. And if they spend, for example, money from the Treasury General account, they inject reserves into the system. But to help balance those reserves, this is today everything is financial mush, right? I mean, the monetary mechanism, transmission mechanism doesn't work anymore. But if you read economic books about economics from 10 years or 20 or 30 years ago, everything still made sense. It's quite fun, actually, to think about it. And what the Treasury was doing was keeping their Treasury General account exactly at 5 billion. And with that, they were helping the Fed with monetary policy. So every morning they came together, the Treasury and the Fed, and the Treasury said how much money they wanted to spend, and together they found a way to keep the Treasury General account at roughly 5 billion. Now, of course, now it's a lot more, but the story is much more complicated, and yeah.
I have now, we're coming up, we have maybe like 10 or 15 minutes left. So I have, I think, three questions left, and they're, I guess, well, one's very complicated, but then the final two are very simple, so we can kind of like wind down. I think it was March 26th of 2020 where the Federal Reserve of the United States released a paper that said we're reducing the reserve requirement ratio of banks to 0%. Did this mean anything to you? Did this change anything? Or was this kind of just like something that already was, if you're in the Richard Werner camp? Or, yeah, I'll let you go from there.
For me, it didn't change anything because, for example, in the UK, there was no reserve requirement anymore. I don't know what it was in the US, maybe 1 or 2%, but in Europe it is 1%. And as we know, after QE, because QE created a lot of bank reserves, right? So these banks, the commercial banks, were already drowning in liquidity, so to say. I mean, reserves enough, right? I mean, but you have to look at these banks. You have the reserves on the asset side, but you have the capital on the liability side, right? And that is much more, it's all about the capital now, because the loans they have on the asset side, and of course there are now, due to the crisis, a lot of non-performing loans. So then they have to delete a few of those assets, the loans, and you have to do the same on the other side of the balance sheet, which is your capital equity. So it's all about the capital now, and the reserves. I mean, commercial banks have plenty of reserves. So scraping the reserve requirement ratio or bringing it to 0 didn't mean a thing to me. I mean, banks will always need reserves to make payments through the system.
Yep.
But and because maybe, like I just said, they want to exchange some reserves for cash if people withdraw a lot. Although the system is now pretty much designed that people are very much suspected as a criminal if they withdraw more than $5,000 or something. So that's
this has been wonderful. One thing that I really enjoy about our conversation is I feel that you and I are both 100% willing to be proven wrong and then switch our position. So I like the approach that you take. I like the approach that you take in being open to if data comes in and if it changes my thoughts, then I'm willing to change my thought. And something that happens in a lot of circles these days is people don't really feel that they can change their mind or change like their position. So I think it's very healthy that you come at it from that way. The final two questions that are really easier ones are what would be some books that you would suggest to people who are just you know, kind of trying to begin their journey down understanding, I guess, like modern economics. And then I'll give you the second question. We'll get to it later, but it would be, I have like an audience that's probably, I mean, we're not rich. I mean, we're definitely not rich. And I don't exactly know the language to use to explain why these things that we talk about are very important to the everyday person. And I'm trying to synthesize a way of explaining that, well, we need to understand, you know, the global debt system or the monetary system or so forth. That way we can kind of like plan accordingly ahead for our lives. So we can come back to that one afterwards.
So your first question is about the books.
Yeah, what would you suggest some people to read, and what are you reading now at the moment as well?
Well, first of all, I'm always reading 20 books at the same time. So it's hard to say. I think I'm reading a book. It's called The Theory of International Trade or something,
Okay.
because I wanted to completely figure out. It's from the 30s, I believe. Really figure out more about international trade, and of course that ties into the international monetary system
Hmm.
and settlement and things like that, and also central banks, but also the balance of payments. And I just want to nail it down. And I was reading some papers today about tips bonds. But anyway, I was thinking about your question today, and I thought, oh, I hope he doesn't ask me about what books to read, because I always get this question and I never know it. Shall I just, The Ascent of Money is nice.
Niall Ferguson, I think. Yeah,
Yeah.
he's a
It's not.
little. Yeah, I'm a little bit more to the left than Niall would be. So you know, we kind of have like some political differences, but it is an interesting
Right.
book. It is.
Yeah. I really enjoyed it. It's a tough question. I don't know. This is the whole thing for me. I mean, I started with this, let's say, hobby in 2010, and I have been searching everywhere for answers, right? And I'm still searching. And luckily now I have access to some good people that I can follow and follow their books. And
Hmm.
I find my way now, and all I need is a few more years to read books, and maybe I'll get there. But in the beginning, it was really, I didn't know where to start. So this is really because in the beginning you know so little, or you're
Or what you do know
at
is wrong.
yeah, or you are at a level and you can't seem to find the right entrance level in terms of books. And
Hmm.
now I have a little bit more all-round knowledge, and it's much easier. But let me just say, I'll think about it after the interview, and I'll drop a few names in the
Okay.
YouTube, whatever.
Wonderful. Yeah,
Below it.
one that you may
Yes.
like. I just found today. It's an IMF working paper called "Money Creation in Fiat and Digital Currency Systems." I don't know if you are familiar with this paper at all.
No.
Yeah, I'll send it over to you as well. It seems that it's about maybe 40 pages. And I came across it today, and it's just something that I have to read. It's something that's definitely getting me excited. And yeah, like
Yeah.
the final question was really just you know, how can we continue to try to explain this to audiences that might think that it's, you know, not really important at all, why it should be something that they're kind of like thinking about.
How we can do this?
Yeah, or is it even important to them, or are we, you know, are we the ones that are lost in the clouds, you know, thinking that what we're talking about, you know, is something important, but then it's actually not going to matter to the general populace.
Well, I think what we're talking about is of the utmost importance, and but it's really difficult to reach everybody because, as you have noticed, you can only learn a little bit if you really try and do like research, educate yourself, and nobody's going to present this uh, to you and explain it unless you study maybe economics. But I've heard that those studies are terrible as well. In any case, I know that in many countries, if you study economics, you aren't taught anything about economic history,
Hmm.
which is terrible. Which is terrible. And I think it's important, but we also have to realize that the world just there are things that go up and things that go down, and there is no constant. We can't avoid people from getting corona. This is just I'm trying. I like to think that I think now 32,000 Twitter followers, and maybe I've reached a few people. So, for me in the beginning, it was about spreading awareness about this, and that's maybe what I'm doing. And I want to do this as well on my personal website, which I'm launching now. Which I really want to make it into a community where people also can add in topics or whatever, and really that it's me with the because most people have a job, and and maybe they have a question, and they can say like how does this work or whatever, and I can explain it shortly, or I can write an article about it.
Mm-hmm.
If a lot of people don't know this and it needs to be clarified, this is I have some time during the day and I can figure it out. And at the end of the day, there is a truth. I mean, let's not forget, in this crazy world,
Mm-hmm.
there is still a truth out there.
Mm-hmm.
But you have to remember that I think a development in, let's say, the welfare society is that people have become lazy and think the government will solve it for you. And so not everybody will dive into this, and can get hurt financially in the
Mm-hmm.
future. And maybe that is a lesson then they have to learn, and then for 20 or 30 or 40 years they tell it to their children, etc.
Mm-hmm.
On the other hand, 2008 was kind of a wake-up call for everybody above
So.
18, and the people that didn't pay attention. Yeah. So I hope that answered your question. Yeah, it's difficult. If I can speak for the both of us, we do what we can.
Yeah, no, that's wonderful. And it's interesting that you say you wanted to develop your website almost as a community. So I'm not sure if you're as familiar with the way that I do my broadcasting. Have you heard of the platform Twitch? It's like the...
No, actually not. Sorry.
Okay, so Twitch is it was a traditional gaming platform where people would watch you play video games and everything, but all of the 2,900 hours that I've broadcast have been live broadcasts with a chat on the side of it. So it's kind of a way where I'm always being fact-checked by my community, and they're linking me sources and articles. And it's always been, in my channel, it's been, they come up with some stories that they want to cover, and I come up with some stories that I want to cover. And then it's a very free-flowing back and forth exchange of information and ideas. And it's really just been an amazing way for me to learn and hopefully, kind of like assist some other people in their learning style. So today we have, there's 69 people watching us live here, and they've been, talking on the sides. They haven't really had too many questions. There haven't been too many that I've brought in, but this is how I've done like my growth and my learning. And I'm very, very grateful that you gave me some of your time to, kind of help me continue to build, upon what I've started so far.
Oh, that's a great way of interviewing people, and I'm happy to have contributed to it. And I hope we can do it more often. Actually, what you just said, I agree with that so much. I mean, I really like I think it was Einstein who said it once, that he said that intelligence is the ability to change your mind.
Yeah.
And or some people say, if you can't change your mind, you can't change anything, right? So that is all that, these are some of the fundamentals I work on. And for example, if I hear you talk about you interacting with your audience and fact checking stuff and figuring things out, I'm like, I want to be a part of this, right? I mean, this is how I work. So yeah.
Yeah, it's been really great. Do you have like a difficult question to leave me with, or anything before you go enjoy the rest of your night?
Me, a question for you.
Yeah, do you have any for me at all before we wind down?
No, actually not. No, I didn't do my homework, and I just thought I'm going to do an interview with Brad tonight, but I didn't do my homework on you. I hope to ask you a difficult question next time.
Yeah, this was really wonderful. I absolutely enjoyed it. I think that conversations like this are stimulating and they're entertaining. And really, just once again, thank you so much.
Yeah, sorry for my English in the first half hour.
Oh, it was wonderful. It was wonderful. And as you stated, if you ever did want to do something like this again, if it was a month or 2 months from now where we could get back together, compare some notes, talk about what we've been reading, I would honestly be thrilled to do something like that.
Yeah, let's stay in touch. Awesome.
So, all right. Well, thank you very much. Have a wonderful evening.